Sometimes it feels like the market is sending us mixed signals, right?
Mm-hmm.
Like today.
Mm.
CPI's up, not a huge amount, but still. Jobless claims, they took a jump too.
Yeah.
But everyone's still betting on a rate cut. So what are we missing here? What's really going on?
Well, I think it's all about context. You can't just look at those numbers in isolation, right?
Yeah.
You have to see how everything fits together, the bigger economic picture.
Okay, so let's dig into that a bit. Let's start with this whole inflation puzzle. 0.2% rise in the CPI.
Mm-hmm.
On its own, not a huge deal, but it was a little higher than analysts expected. And it plays into this idea of sticky inflation, right? Can you kind of unpack that for us?
Yeah, sticky inflation.
Yeah.
What that means is basically even when the things that were causing prices to go up, like supply chain problems, even when those start to ease up, those price increases, they tend to stick around.
Okay.
So it's like businesses, they've been raising prices because their costs have been higher. And even if their costs come down a bit, they might not be so quick to drop their prices. Makes sense, right?
Yeah, so it's not just about inflation going up or down, it's how long those changes last.
Exactly. And actually, the annual inflation rate, it actually went down this month, which is good. But the question is this the start of a real downward trend? Or is it just a temporary thing? And that's what the market's trying to figure out, right? And that's what the Fed is watching really closely.
So they're walking a tightrope. They want to get inflation under control, but they also don't want to cause a recession.
Exactly. It's a tough balancing act, and everyone is on the edge of their seats to see what they'll do.
Speaking of anxious, let's talk about those jobless claims. Spiked last week, caught a lot of people by surprise.
Yeah, it did. But again, context. Hurricane Helene, that had a big impact, especially in some key sectors. And then you've got the Boeing strike still going on. Those are big external factors that definitely messed with the numbers.
Right, so not necessarily a sign that the job market is actually weakening.
Not necessarily. Overall, employment has been pretty strong. But this jump in claims, even with the hurricane and the strikes, it's something to keep an eye on. One thing to watch is the 10-year Treasury yield.
Okay, for those of us who aren't quite fluent in bond market, what does that actually tell us?
Sure. So the yield, it's basically a measure of how confident investors are in the long-term prospects of the economy. When they feel good, they're fine with lower yields on those bonds. But when things get uncertain, when they get a little nervous, that yield goes up because they want a bigger return to compensate for the risk. And lately, that 10-year yield, it's been climbing.
So a little warning bell maybe.
Yeah.
That things might not be as peachy as they seem.
Yeah, you could say that. A little bit of caution in the air, for sure. A little nervousness about what the future might hold.
And speaking of uncertainty,
Yeah.
China, right?
Yeah.
Let's talk about stimulus plans, but
Right.
details,
Yeah.
pretty scarce.
Very vague so far. And, that's what's making the markets a little jumpy. Investors, they love an announcement. But when you don't know the details, it's like, what are we supposed to do with this?
Right, becomes anyone's guess.
Exactly.
And we saw that this week, right?
Yeah.
CSI 300 up at first,
Right.
then back down again.
Yeah.
Hang Seng, though, in Hong Kong, that surged. Yeah. Seems like everyone's reading the tea leaves a little differently.
Absolutely. And this is where you have to understand, market psychology, right? Anticipation, it's just as powerful as what actually happens.
Especially with an economy the size of China's. Whatever they do, the whole world feels it.
Exactly.
So what are investors looking for now? When do we get some clarity?
Well, everyone's got their eyes on this finance ministry meeting this Saturday. That's the hope anyway, that we'll finally get some concrete details. What's the scale of these stimulus plans? What are they actually going to do? That kind of thing.
The moment of truth.
Exactly. We'll see what actually happens.
Until then, we wait. But let's shift gears a little bit, talk about another major economy that's been in the news. France. They're trying to navigate some choppy waters, right? Tax hikes, spending cuts. How are the markets reacting to that?
Well, anytime a government starts talking about raising taxes and cutting spending, it makes investors a little nervous. Uncertainty,
Makes sense, yeah. It's about finding that balance, right,
Yeah.
between getting your financial house in order, but also you don't want to stifle the economy completely.
Exactly. It's a delicate balance. And one of the things we're watching closely is the spread between French government bonds and German bonds.
Okay, explain that, because not all of us are fluent in bond market.
Sure. So basically that spread, it tells you how risky it's seen as to lend money to France compared to lending money to Germany. Germany's considered, a very safe bet.
Right.
So if that spread gets wider, it means investors are more worried about France. They need a bigger reward to take on that risk.
So wider spread, more worried, like an insurance premium kind of thing.
Exactly.
Okay, so we've got inflation worries. We've got this jobs report that's gets some question marks. We've got China keeping everyone guessing, France trying to walk that tightrope. Anything else we should be adding to this global economic stew?
Well, we can't forget about energy. Oil prices, they've been ticking up lately, and there are a couple of things going on there.
Let's hear it.
So first, you've got those geopolitical tensions, over in the Middle East. That's always a factor in the oil market, right?
Yeah.
Any instability there, and people get nervous.
Right, because that disrupts supply, and oil, it's the lifeblood of, well, everything.
Exactly. So even if there's just a chance of disruption, prices, they tend to go up. And then on top of that, you've got something a little closer to home,
Oh.
Hurricane Helene.
Okay, now that seems unrelated. How does a hurricane in Florida affect the price of oil globally?
Supply and demand. Hurricane Helene, it really messed with oil production in the Gulf of Mexico. Refineries shut down, production slowed down, and when supply drops like that,
Prices go up.
prices go up. Exactly.
So you've got geopolitical turmoil on one side of the world, a natural disaster on the other, both pushing oil prices higher. It really shows how everything's connected, doesn't it?
It really does, yeah. This global economy, it's all intertwined.
It's like you said, right? Everything's connected.
Yeah.
One thing happens over here and...
Domino effect.
Exactly.
Yeah, the whole thing's so complex, all these different pieces.
So much going on.
Even for us, people who watch this stuff every day, it can be,
A little overwhelming.
yeah, sometimes a little bit. So I get it. If people are trying to keep up, it's like, where do you even start?
Right, exactly.
Huh.
So for our listeners, what should they be taking away from all this if you had to boil it down?
I think, honestly, the most important thing is to look beyond just the numbers themselves. Don't just look at like, oh, inflation went up this much, but think about why. Why did it go up? Is the market right to be kind of shrugging it off? What's with this yield curve everyone's talking about? Is that a real sign of trouble ahead? And China, why are they being so vague about these stimulus plans? Those are the questions I think are really important.
It's like, we could all read a headline, but it's understanding what's behind it.
Exactly. It's like, when you're reading something and you can kind of tell there's more to the story than they're saying.
Oh, yeah.
It's like that you got to read between the lines. That's where the real insights are.
Connect the dots.
Yeah. See the bigger picture.
Well, on that note, we've covered a lot of ground today. We've looked at inflation, jobs, China, this whole French budget situation, even oil prices. Thanks for breaking it all down for us.
Happy to be here. Always good to talk about this stuff.
And for everyone listening, remember, the markets, they never sleep. This conversation, it's always going on. So stay informed, stay curious, and we'll see you next time for another deep dive.